What separates good investors from the truly great ones? It's a question that's puzzled market watchers for decades. Is it raw intelligence, access to secret information, or just being in the right place at the right time? The answer, as history shows, is far more nuanced and far more interesting. The real edge isn't luck or perfect timing. It's the courage to act when others hesitate, the willingness to buy phenomenal companies when they're temporarily out of favor, trading at prices that seem almost too good to be true. This is where legends are made, in the moments of uncertainty, when the crowd is paralyzed by fear. When the masses rush for the exits, the smart money quietly steps in. While others are selling in fear, the best investors are calmly building positions, knowing that true value is often found in the dip. Today, I'm shining a spotlight on a powerhouse in digital reporting solutions, a company trusted by major banks, government agencies, and some of the world's most iconic brands. Despite its impressive client list and robust technology, it's currently trading at a massive discount, overlooked by many in the recent market turmoil. This is a rare window of opportunity, a chance to buy a true market leader that's down 47% from its all-time high. Such steep declines are uncommon for companies of this caliber, and they don't last forever. So buckle up and get ready to discover a stock that's not just poised for a rebound but primed to soar. Hit the like button, let's get 1,000 likes on this one, share the video and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Let's jump in and see what makes this opportunity so compelling. The company I'm talking about is Workiva, ticker symbol WK. Workiva leads cloud-based compliance and reporting software, streamlining complex tasks for businesses. Its platform connects directly to data sources, ensuring accuracy and eliminating manual errors. Hundreds of ready-made templates make regulatory and internal reporting fast and reliable. That's why Workiva is the go-to for industries where mistakes aren't an option. Banking, insurance, and government rely on Workiva for compliance and peace of mind. The stock's recent dip is a disconnect from its business strength, a buying opportunity. Workiva is a market leader with a sticky product and a massive addressable market, now at a discount. This is the setup for explosive returns. Don't let Wall Street's mistake be your missed opportunity. Let's break down what makes Workiva's platform so essential. Here's how it simplifies complexity. Workiva is a data aggregation and collaboration powerhouse. Teams across departments work together in real time, with all data linked to a single source. Update it once, and it's updated everywhere. This connected reporting eliminates version control nightmares. Workiva integrates seamlessly with existing business tools, acting as a unifying layer. Adoption is easy, and managers extract data directly from source systems. No more manual entry. The result? Massive time savings and reduced risk. Automation and audit trails give executives confidence in their reports. Hundreds of templates cover everything from SEC filings to specialized industry reports. Workiva adapts and grows with its customers, making it a platform for the future. The future? ESG, environmental, social, and governance, reporting is now a global requirement. Companies face a data nightmare, and Workiva is the solution. In 2021, Workiva expanded to help businesses track non-financial data, like carbon emissions and diversity, with the same rigor as financials. This move lets Workiva sell more to existing clients and attract new ones just starting their ESG journey. New regulations, especially in Europe, are forcing thousands of companies to report ESG data. Workiva's trusted platform is the obvious choice. ESG is now a core growth driver, not just an add-on. Spotting these trends early is how you win. If you want to learn to spot opportunities like this, check out our Value Stocks Investing Master Course. Don't just follow tips, learn to become a successful, independent investor. Let's look at the numbers. Let's talk numbers. Workiva's Q2 results were outstanding. On July 31, 2025, Workiva reported $215 million in revenue, smashing expectations and growing 21% year-over-year. That's up from 17% growth in Q1. Demand is accelerating. Management raised full-year revenue guidance, signaling confidence in future growth. The net revenue retention rate hit 114%. Existing customers are spending more. This proves the platform's stickiness and the success of its land and expand strategy. Customer count hit a record 6,467, up 5% year-over-year. The fastest growth is in high-value clients with contracts over $100,000. Large organizations are standardizing on Workiva's platform. The fundamentals are simply outstanding. The market is waking up, but there's still time to act. Let's see what Wall Street thinks. Here's the analyst consensus. Wall Street's top analysts are overwhelmingly bullish on Workiva. Of 12 analysts covering the stock, 10 rated a buy, the highest rating. The other 2 are also bullish, with overweight ratings. Not a single sell recommendation, 0. That's rare in today's market and signals strong business fundamentals. The average 12-month price target is $94.10, with some as high as $105, a potential 24% upside. This level of consensus is a powerful signal. The recent dip was a market anomaly, not a reflection of Workiva's health. Wall Street sees Workiva as undervalued and ready to rebound. Let's talk valuation. Here's where the opportunity shines: valuation. Despite rapid growth, Workiva trades at a price-to-sales ratio of 6.1, below its 10-year average of 7.4. Workiva, with a market cap of $4.42 billion in 2024 revenue totaling $738.68 million, continues to draw investor attention, even as it operates at a net loss of $55.04 million. Currently trading at $78.84 per share, the stock is sitting about 30.57% below its estimated fair value of $102.94, hinting at a potentially undervalued opportunity in the small-cap tech space. On August 1st, Workiva delivered a surprise in its Q2 earnings report, posting earnings per share of 19 cents, well above the consensus estimate of just 5 cents. That strong beat triggered a surge in investor enthusiasm, sending the stock up by an impressive 32% in a single day. The earnings not only highlighted accelerating revenue growth, but also expanding margins, bucking the broader trend seen across much of the tech sector. Analysts point to Workiva's large addressable market and impressive net retention rates as key drivers of long-term growth. Even after the rally, many still view the stock as undervalued. There's growing optimism around Workiva's prospects, particularly as investor sentiment shifts towards small-cap value plays. The company's international expansion is another compelling angle. With ongoing growth efforts across Europe and the Asia-Pacific region, Workiva is positioning itself for broader global traction. Analyst sentiment remains strong, with many maintaining a strong buy rating and assigning a fair value target of around $107 per share. Despite the recent volatility, Workiva's trajectory signals underlying strength. The combination of better-than-expected earnings, international growth potential, and market undervaluation creates a compelling story for long-term investors. While broader market uncertainties may still influence short-term price action, Workiva's fundamentals and strategic direction offer reasons to watch this stock closely going forward. This is classic value investing, buying quality on sale. The risk-reward setup is incredibly favorable for long-term investors. Want to learn how to spot these opportunities? Check out our legendary value investing course. Think like a business owner, not a trader. For more exclusive tips, join our Stocks Galore Patreon. Now let's wrap up. Here's why you shouldn't wait. In the fast-paced world of investing, opportunities don't wait around forever. That's exactly the case for Workiva, a company that's not just a leader in digital reporting, but a true innovator, making complex processes simple and accessible for businesses of all sizes. Workiva is riding the powerful ESG megatrend, positioning itself at the intersection of technology, compliance, and sustainability. As more companies are required to disclose environmental, social, and governance data, Workiva's platform becomes even more essential, giving it a unique edge in a rapidly evolving market. Their Q2 results don't just show growth. They reveal a business that's accelerating, outpacing expectations, and capturing new market share. Revenue is climbing, customer retention is strong, and the company's forward guidance signals even more momentum ahead. Wall Street has taken notice. Analysts are unanimously bullish, with 0 sell ratings, a rare show of confidence that speaks volumes about Workiva's prospects. When the experts agree, it's worth paying attention. The recent 47% drop from its peak wasn't a sign of weakness. It was a gift for savvy investors. Market corrections often create opportunities to buy great companies at a discount, and this was one of those rare moments. Consider the scale. Workiva operates in a $35 billion addressable market, yet its current market cap is just $4.7 billion. That leaves an enormous runway for future growth, with plenty of room to expand and capture new customers. This isn't just a short-term play. Workiva is a stock to own for the next decade, as digital transformation and ESG requirements become the norm across industries. Patient investors could be well rewarded as the company continues to execute its vision. Remember, the best time to buy a great company is when it's been unfairly beaten down by the market. That's when the upside is greatest, and the risk is often lowest for those who do their homework. That time is now for Workiva. The window of opportunity won't stay open forever, and waiting on the sidelines could mean missing out on significant gains as the market catches up to the company's true potential. Of course, always do your homework. Dive into the financials, understand the business model, and assess the risks. But right now, the facts point to a company with a powerful competitive moat, a visionary leadership team, and a bright future ahead. Don't let this one get away. Opportunities like this don't come around often, and the cost of hesitation can be high. I'd love to hear your thoughts. Share your strategies for spotting great stocks in the comments below. What signals do you look for before making a move? And if you found this analysis helpful, don't forget to like, share, and subscribe for more essential financial insights and timely opportunities.